Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today is the big day for the earnings report. So we're going to take a look at what could potentially happen with earnings report, unemployment report, and where things might be going. We're going to take a look at three sections, essentially. First one is the Jim Cramer interview. Second one we're going to take a look at would be, is Bitcoin enough for retiring? And lastly, we're going to take a look at Mark Avallone, who's president at Potomac Wealth Advisors, into which way the winds are blowing and which way this market might set up to be a success or a failure. So let's jump right in. So first up, Jim Cramer. If you don't know him, he's on CNBC television. He's an ex-business mogul, a lot of investments, a lot of different interesting theories that he has. Also, he's got his pulse on what is going on in the financial market because he is in that inner circle. So it's always interesting to take a look at what's going on. So the first part we're going to talk about is he's going to talk about Fed, which is propping up everything, and are the jobless claims even relevant? So let's take a listen.
This morning, Fed Chairman Jerome Powell decided to pull out all the stops, pulling down a $2.3 trillion gauntlet against the economic catastrophe caused by the pandemic. It was a remarkable move, coming within seconds of the devastating news that 6.6 million more people filed for unemployment insurance last week. And that's why, because of his moves, that the averages were actually able to rally, including a lot of the down and out stocks, Dow ultimately gaining 286 points, S&P climbing 1.45%, NASDAQ advancing 0.77%. Without Powell's extraordinary, and it was, I was kind of blown away, so extraordinary announcement, those hideous jobless claims would have pancaked the stock market. We've gone from the strongest labor market in a half century to one of the weakest in no time flat. But it didn't matter to Wall Street because the Fed's buying all kinds of distressed debt here. Remember, that's that side you don't see that I keep saying is so important. Buying municipals. Ooh, some of those are hurting. He's buying high-yield corporate bonds. It's fabulous news because those were two big pressure points in this rapidly deteriorating economy. But what a difference from the old days. Between the Fed's latest moves and the $2.2 trillion rescue package from Congress and some more that's on the way, it's really clear to me that the policymakers are thinking big. And they're willing to spend big to keep this economy afloat. And I say cheers.
So that's interesting. Right there, what he's essentially saying is it doesn't matter how many jobless claims come in, how many businesses are seemingly going under. The Fed is going to step in and just buy everything. So the question is to you, do you think that is actually going to happen? Is that good policy, or what could potentially happen in the future? Now, there is one thing to note. This was recorded last week. This was on April 9th. Today is April 14th when the earnings report is due out. So it'll be interesting to see exactly how that affects the market, and that'll be the big play. And this picture, or actually this image right here, let me go a couple seconds.
Unlike 2007, when the whole federal government was committed.
This right here. So where it says here, the Dow's best week since 1938, more than 16 million Americans have lost jobs in 3 weeks. It's kind of an inverse relationship, obviously. And it's just, this was actually a meme that was circulating around on the social media sites. And it talks about how this is what's wrong with everything that's going on today. But whether it is right or wrong, it is happening regardless. And it is pretty amazing. So we have the Dow's best week, which was last week, and also on the same flip side of that token, 16 million jobs were lost. So where is everything coming from? It's coming from the Fed. Let's keep going because we're going to talk about how the Fed is doing the opposite of what they did in 2008, and is it enough? And then we're going to talk about the SBA and how it's actually going to help improve everything, which could lead to the cryptocurrency and Bitcoin market maybe potentially having it as rocket fuel. So let's take a listen.
To absolutely doing nothing, and you know why? They know nothing. They know nothing. They know nothing. And that button was because they didn't care. They know nothing. They were too busy thinking about who they could punish. Not this time around. Well, I'm just saying we are moving aggressively to put money in the hands of the unemployed, the underemployed, the small business person, the person who lost the dry cleaner, the person who lost the barbershop, the person who lost the restaurant. They are being helped here. And we have to do everything we can at the same time to stop the spread of the virus. In the run-up to the Great Recession, our leaders didn't take any action until the financial system had fallen apart. This time they've learned their lesson. They're actually ahead of the curve. Quite impressed. All this stuff is
So yeah, and if you have a small business like I do, you would actually have gone out and look for those types of loans that are being available to you. Here was the email that I got after I applied for one of the two loans. The first one was the EIDL, the disaster loan. The next one was the Paycheck Protection Program. And either of these, I have not received anything. And a lot of different small business owners haven't received anything as well. So it'll be interesting to see like how fast they can get those funds out. I can tell you this. Some of my friends have actually gotten their stimulus check of $1,200 here in the United States. Now, again, I don't know where you're at in the world. I don't know if you're in Canada, Mexico, Europe, Australia, Philippines. I have no idea where you're at. But in America, they are doing stimulus packages like crazy, and they are having the Fed just print a ton of money. Now, I know in Canada they're doing something in this regard. Instead of $1,200, I think it's like $2,000. And I get conflicting stories about if it's good or bad or whatnot. But I can just tell you what I've seen so far. As far as small businesses, which is 50% of the businesses that are actually in the United States, very few have actually gotten this Paycheck Protection Program or the EIDL. Some bigger type of organizations have, but as far as that trickling down, has not. So we'll see if it works out. I don't really know, but I can tell you this. We are in the middle of April, and this program went live I think around before even April 10th. I think it was the first week of April it went live, and then it kind of progressed into different things. So we'll see if it actually gets out there. If this can actually come out, this will put money into the hands of not only the businesses, but of course the employees. And those employees have money, then they're able to pay for their things like their mortgage, their rent, food, those types of things. And maybe this could translate into the market being a little more stable, not just the traditional market, but maybe the cryptocurrency digital asset market. So we will see. The problem, though, is with that Paycheck Protection Program, it is run through the banks. The EIDL loan is run through the government program, the SBA, the Small Business Administration. The problem with running things through the banks is the banks suck, and they are dragging their feet, and that's not just me. It's also Mark Cuban, billionaire here in the U.S., who talks about, hey, these small businesses are out in the cold because they are getting so slow, because they're using the old banking techniques as far as like doing some different checks and background checks, seeing where the equity could actually be, and it's just a big problem. So if they don't fix that and fix that fast, then it's going to just drag out, and then people aren't going to get their money fast enough, which is going to drag all the markets down. Just my opinion. We'll see exactly what happens. And also, this is the week of when we're going to see all the different earnings from all the big companies. Johnson & Johnson, JP Morgan, Wells Fargo, all these different these places. This is just today. Tomorrow, you have 221 more companies who are going to report earnings, and all the way through. So for this entire week, we're looking at 956. So that's a lot of companies who are going to report their earnings. I do not see these earnings report coming out and being very stellar. I expect them to be extremely depressing as far as the prices, and we'll see if that actually translates into what the market and how it responds to, or if the market thinks, no big deal, the Fed will just print more money and we'll be fine. That's what's concerning, but we'll see. So now the next part, Cramer talks about a pretty good instance of when this could all just go away and what could be a return to normalcy.
It's essential, but it's only keeping us on life support. It's not enough to breathe new life in the economy. At the end of the day, there are some things money can't buy, like health. Without a drug to treat COVID-19 or a vaccine that will let us eradicate it, we're not going to get back to normal. We could end the lockdown tomorrow. It won't make that much difference until we get the outbreak under control. I know we can't stay in quarantine forever. That will cause a depression, which is why we need to use this precious time to set up testing facilities all over the country and make billions of masks. How the CDC flip-flop?
Okay, so it just makes sense, right? If we can't get a vaccine out there, what's this all going to be for? And especially because there's different countries that have gone from total lockdown to then letting their citizens out, and then there seems to be some type of reinfection rate. I know in South Korea they had talked about how 96 or so people that they had been following or testing, they had been free from or they had gone through the coronavirus. Then once they were released, they got it again. Now, that could be from faulty testing. Who knows? South Korea, we have no idea. But that is a scary scenario. So look, for all this to really subside, we need a vaccine, and we need a lot of testing kits, and we need those to come out. Speaking of which, this was the most interesting part of this whole article, or this whole video, when he talks about Abbott. So let's take a listen.
A lot more coronavirus testing before we can reopen the economy, and that's why we need to rely on Abbott, because it's got that 5-minute test. Hey, a buddy of mine had the 5-minute test yesterday, said no pain, and then bingo. They're producing 50,000 of them a day. I want them to ramp up, but so does everybody else. See, we got to get to at least 500,000. 500,000 at least, so people can feel confident, go out and do things. Abbott's a fabulous company. I think this test is a game changer. I think make enough of them. Hey.
So if you're into investing in the traditional market, maybe Abbott might be something you would want to look at. I will not be investing, but just something to be interested in. Because, I mean, look, if you got one company who can produce a 5-minute test for coronavirus, I mean, who is not going to want that? Not only just companies, but how about the U.S. government or governments around the world? Don't know. So what can we learn from this? Well, we need to look at what's happening right now and what will happen in months and years from now to make the best choices. And this leads us to the inevitable article of investing for retirement. As time goes on, we're going to have to put our money into somewhere. And no one's going to want to put their money into a bank account where the rapidly influx or inflation that is going to happen is just going to decrease the actual buying power of your fund. So what do you do with it? Well, I think what's going to happen here is that analysts and financial planners are going to push towards certain types of assets like Bitcoin to put their money into more and more. I see this actually happening. So this is a pretty good article written off this was bitcoinist.com. It talks about more analysts than ever are encouraging young people to take advantage of the current market dip and begin investing in Bitcoin for retirement. Now, for those still in the workforce, long-term devaluation of fiat, such as dollars and euros, could be devastating. Years of prudent investment could disappear as the earning power of retirement savings evaporate. And this is from Da Vinci. If you don't know this guy, he's a definite follow on Twitter. Also, he's got a YouTube channel. He was the one from, I mean, he was like OG from like back in like 2011, 2010 maybe, where he was talking about Bitcoin and how big it could be. And he just says that this is what he learned in school about saving for retirement. And they had told him, back then, like if you can get 150,000, that'll be good. But when he was even that young, he thought to himself, well, if I get 150,000 now, what's that going to be worth, in 2020, 2030, 2040? And we can see that 150,000 is not enough to live on in your golden years. So what kind of asset can actually go up? Maybe Bitcoin. And so Da Vinci advocates Bitcoin as a possible hedge, meaning that I think he also invests in traditional markets like a lot of people do. Gold, silver, sure, and Bitcoin, hey, why not? So Bitcoin moving into retirement portfolios. The fact that crypto ownership skews towards the young is well known, and more than ever, workers under 35 are choosing to add blockchain assets to their retirement portfolios. Crypto is likely to be added as hard assets like gold and treasury bonds as a component of a properly managed portfolio. Treasury bonds, sure, I guess. And then current events are giving legitimacy to this new asset class. So look, I think this is what's going to happen, over the next, months, years, decades to come. I mean, you've already got big companies like Fidelity Digital Assets, which has 2.46 trillion assets under management. You've got Ameritrade with 1 trillion assets under management. And you got a place like Van Eck, which, has a paltry 49 billion assets under management, but they do a lot into gold. And they just released this in January 2020, which talked about how Bitcoin is far superior to gold in pretty much every way. And they are going to be recommending that to their investors, to their clients. So if you have these financial planners bringing people in, like, look, Jerry, we've had you in the S&P 500. We had you in these different indexes, and it worked out okay, maybe gold and silver, but we need to really take a look at Bitcoin and cryptocurrencies and digital assets, because over the last awful coronavirus time frame when everything dipped, these types of assets they actually held their value. So we think they're actually going to do well. Oh, and also, Bitcoin was the one asset that outperformed everything in 2019. It outperformed the S&P 500, outperformed oil, outperformed even gold. So we think you want to actually diversify. Let's put 5 to 10% into these types of assets. Sure, sounds good. And I can only see that happening because why wouldn't they? I think it'll be not financially prudent or actually downright criminal if they didn't actually recommend these types of assets to their clients. But that's just me. I would only think that, hey, if I want my client's best interest at heart, I have to recommend these types of assets, especially if they're outperforming everything and they actually stayed afloat during the financial crisis of the coronavirus in 2020, which we'll see how that ends up, but pretty sure it's going to do pretty well. So my final thoughts is that we know that Bitcoin and crypto were designed for this type of economic crisis because it was created in 2009 due to the last crisis or the last bubble, which happened with the housing market, and that was just awful. But that's why it was created by Satoshi Nakamoto in the white paper. And look, it's holding steady, so I think when it's all said and done, the dust clears, we should be just fine. But let me play devil's advocate, because we just talked about how the economics are pretty rosy and everything's going to be great. Let's take a look at a flip side to that same coin. So we've got, this is Mark Avallone. He's the president at Potomac Wealth Advisor. And he's going to talk about essentially the opposite end of that coin.
Mark, I got to say, when you have calls like that about the idea that we could see a plunge in economic activity, you wonder why markets are as optimistic as they are. What exactly are markets pricing in terms of when things get back to normal?
The markets are very optimistic right now. They might be front-running the Fed a little bit, and I think they're looking at a robust recovery that just quite has not yet happened. I think we're forgetting about the collateral damage that's going to be on Main Street. Economic growth in this country is on the margin. Banks lend when they're comfortable. People bid up. Investors bid up risk premiums when they have a high risk appetite and return those multiples to what we saw just a few months ago. And we don't have that right now. We're going to have a different economic system of sorts where banks are going to require more collateral. They're going to not lend into these strip malls and on Main Street. Restaurants are not going to open up as quickly and as easily as they have been. And I think there's going to be a drag that hasn't been fully factored in, and I'm not in the camp that this is going to be a rosy, robust recovery. I think we will get one, but it's going to be more sluggish than these optimistic forecasts are outlining.
So when you say sluggish, what exactly does that mean? Does that mean in the third or fourth quarter of 2020? Does that mean in the first half of 2021, second half? What exactly does that play out like?
So before we get into that, this guy, I agree with him. Mark Avallone. And I think that these markets are very overly optimistic, and here's how this is how I see it. The recovery is going to be sluggish. I was talking to this gentleman named Cody. He was with me in Brazil, and he is a pilot for a shipping company out of Alaska, and he had just gotten hired on to do commercial flights for one of the big airlines. And he said, yeah, he goes, now with this coronavirus, I got to turn it down. I was like, why? I mean, it'll eventually go away and you should be fine. He goes, yeah, coronavirus will go away. I mean, we'll get a vaccine for it at some point. But you got to remember, people aren't just going to flip a switch from day 60 to day 61 and go, okay, I'm going to start flying now. I need to start taking vacations. I need to go see everybody. It's not going to happen like that, because people are still going to be worried as soon as this thing actually is wiped out, because they're going to have to go back to work. They're going to have to save up money. They're going to have to do all these things. So I can't go there now. That's not a very smart move for me. I'm going to stick right where I'm at. Also, I mean, the same thing with like the restaurant entertainment industry. Now, do you think that everybody's just going to go back to their old way of life and just go out to eat and not really wash their hands too much and don't worry about wearing their masks? I can tell you, I don't think it's going to happen. And here was a great story from the New York Times, where they talked about that China ends the Wuhan lockdown, but normal life is a distant dream. And it just pretty much goes over what's going on in Wuhan. And I think it's going to happen the same place, the same effect all across the globe where people are not going to go back to their old way of life. They're going to actually slowly get into it. I don't think anybody's going to want to come back because people don't trust it. I mean, what's the chances that, this coronavirus couldn't come back? So I think people are going to be very slow to doing the things that they usually used to do, which means a more of a sluggish recovery for the economy. And that's how I see that. So now Avallone's going to talk about banks and how they can fix all this.
It's going to be a slow rollout, and it's going to be deliberate. It's going to be industry by industry, and it might even be region by region. The virus has not spread throughout the country. We hope it doesn't. But if it does, that would be another factor. Just because we're having slowdowns in what were hotspots doesn't mean others are not going to flare up. I'm really concerned about what's going to happen to bank lending standards, how aggressive or how interested they're going to be. I think this PPP loan program is going to boost the earnings for community and regional banks, at least a shot in the arm for those that really need it. But I think on an ongoing basis, they're going to be struggling more with loan workouts and reevaluating their collateral and relationships with small borrowers in the hundreds of thousands or in the millions. And I don't think we understand how economic activity slows when banks slow, when every loan application takes twice as long or longer, and when banks require higher covenants and more collateral. What a drag that is on the economy.
So not only that, but here's another factor. So the banks are slow. Banks suck. They just do. To get their money out there, it's going to take a longer time. Now, here's another problem. This PPP, the Paycheck Protection Program, that will cover a small business's payroll for 2.5 months. That is the maximum you can do. So if you are, some kind of small company, you got 10 employees, each employee makes $1,000. That's $10,000 a month. So you're going to get $25,000, which would cover, your payroll for 2.5 months. After that, you're SOL. I mean, you're pretty much on your own unless another stimulus package gets passed. So with the way that the banks are going, very slow, with the way that Congress works, kind of slow, we would just say, who knows what's going to happen? And again, even if we do find a vaccine within 2 months, doubtful, 6 months, doubtful, who knows, you're still going to have a lot of sluggishness on the part of the economy, and there's no more bailouts that are or stimulus packages that are planned right now. And if you're only going 2.5 months, what's that going to do for the businesses later on? Do you think they're going to make it, especially if people aren't coming out like we just talked about? It's a consideration. So lastly, Mark's going to talk about earnings are down, but tech is a big type of industry that they are very bullish on, which I like to hear because cryptocurrency digital assets are technology.
So the consensus right now, as much as there can actually be a consensus given what we don't know, is that energy, industrials, retail / consumer discretionary are going to be the worst earnings declines this earnings season. Meanwhile, tech and comm services are going to hold up the best along with utilities. Does that kind of jive with your view overall for how you should position?
That absolutely does. We're fans of the technology space right now. Communication services, we've been talking about that, and that's where we want to overweight and allocate. Energy is another headwind. I think what another mistake we're making is we're isolating coronavirus and the markets as if it's a one-to-one correlation, and those are all the data points that matter. Look, we have a huge energy glut. That's going to be a drag. It's going to be a drag on U.S. production. It's going to slow economic growth in huge areas of this country. It's also going to negatively impact the high-yield market, notwithstanding what the Fed does, what surprises they have in the bond buying. So that'll be another drag. Sure. So I think what you outlined there is a good blueprint, and we're optimistic on some tech stocks. We are investing capital. It is on the growth side. It is on the economy of tomorrow. But when we look at drags, we see energy at the top of the list, and I think that's a good call.
And that's it. So I like that. I mean, it's a positive type of thing. But for me, I just don't see people just running out to the life that they used to have beforehand. But I could be wrong. So let me know in the comment section below what you think. But here's my final thoughts. I think it comes down to today and really this week with the earnings report and the unemployment numbers. The question is, which way do you believe it's going to go? Is it going to be the Fed will bail everything out and this will blow over and the market and Bitcoin will take a bumpy ride up in the short term and the long term, especially with the Bitcoin halving coming up in, 30 days or so, less than 30 days. Or the Fed can't do it all, and this stimulus bailout of printing money will not work short-term or long-term, so it'll be a bumpy ride down. So let me know what you think in the comment section below, and that's it for today's video. So thanks for sticking with me. I know I've been around for a couple days. I'm creating a video that has to do with the Ledger Nano, the new Bluetooth one, Ledger Nano X, how it works, how you can stake, how you can take a look at your portfolio through your phone, all that good stuff. So once that's out, I'll let everybody know. But that's it for today. Thanks for sticking with me. And if you like those types of videos, there'll be 2 more coming up on the left and right. Click on those, and I'll see you on the next one.